Let's go for it.
Hello, hello. Good morning, everyone. Welcome to another wonderful day of life with us over here. And you know what? Because I know you guys like seeing my little script as I give you the presentation. Here, let me go. Let me share this with you guys. Because if you are in the Los Angeles area, it has been an interesting evening and morning, but we are here. We are safe. Sending big thoughts to everyone out there affected by the fires currently happening in Los Angeles. My name is Sadie Uribe, and I'm the media producer for the Los Angeles Regional SBDC Network. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. We offer no-cost services to the local businesses through funding provided by the U.S. Small Business Administration, SBA, and from the California Governor's Office of Business and Economic Development, Go Biz. The Los Angeles Regional Small Business Development Center network serves small businesses throughout Los Angeles, Santa Barbara, and Ventura counties. We offer no-cost business advising, meaning that you can meet one-on-one via phone or Zoom to address your specific needs and challenges. And we also offer virtual training, and we're going to update this, Lori, to saying training and programming, because this is definitely a program to help and adapt and grow your business. So on that note, I am going to say good morning to my love of 2025. Well, she was my love of all these other years, but now I can say officially my love of 2025, Miss Lori Williams. And we're going to be doing some fun high vibration activities today.
We definitely are. And Sadie, happy 2025 to you and happy 2025 to everybody. I love New Year's. I love new beginnings. I love the new year. I always have. And for some reason, 2025 just feels like it's going to be a good year. And maybe it's just because I define it as such. So I'm going to get into my beginning, but I'm going to let you know right now, we're going to come back and chat about it in a minute. So once again, as Sadie mentioned, really heartfelt to everybody out that is in the situation of the fires. I understand there's 3 fires going on right now. And to that end, the guest that was going to be coming today, David, unfortunately is in one of those zones and he is on a warning of possible evacuation. So obviously won't be here today. We just found that out this morning just a little bit ago. He is going to be rescheduled for February because I really have, a high interest as well as the audience in his topic. So apologize about that if you were tuning in for that today. He will be back in February. I'll be setting a date to have him come on board. So I didn't want to not have the show today. The show must go on. That's a Hollywood expression, right? And I always say if I'm still alive and breathing and Sadie's here for the technology to make the show happen, I'm here. So, what are we going to do today? I don't quite know, but we're going to have a fantastic conversation, and I'm going to invite you guys to be the guests. So go ahead and start throwing into the Q&A any questions, anything you want to talk about, things that are on your mind. Let's just all grab a cup of coffee and have a warm, lovely 2025 new discussion, new beginning. So I'm going to go through my little spiel. I'm going to call it that this morning. And let's just have fun today, okay, guys? Because I think we all need a little fun. So, with that being said, let me go through a few things here. Of course, we've got my webinars. We got the session 2 and session 3 of financial literacy planning. I talk a lot about how important, especially session 2 and 3 is of really understanding your numbers, really knowing if you're profitable. We're going to talk a little bit about that. I'm going to start this morning's discussion with some concepts that I speak about in regards to understanding your numbers and knowing you're profitable. But it's interesting because I get this sense, I'm going to use a Sadie word, vibe. I get this vibe that you guys, the entrepreneurs out there, are coming in really in 2025 and getting serious about getting stuff together and having some success. And I say that because I was shocked yesterday. I went to click in to do my webinar, which you guys have been with me a long time. I do it every single month, right? And 184 people had signed up. 80 people were on the webinar yesterday. So it told me, oh yeah, 2025 is the year of the entrepreneur. Already my calendar for January is getting booked. So I am in a mindset that says, let's get down to business and make this happen in a way that allows us to have discretionary income to make sure we can pay our bills, et cetera, et cetera. And I think you guys are on the same course of thought. So do check into these literacy sessions because they will give you the tools to start evaluating the finances within your company. I also have my legal structure and tax advantages webinar coming up where I go through the different legal structures. I still get so many people that think they must be an LLC. I had somebody ask me the other day, and nothing's wrong with these questions. It just goes to show how much of a misunderstanding there is. They say, can you be a sole prop for a couple years? It's like sole props. It's like, I feel bad. The sole props have become the bad stepdaughter, but it's not true. Sole props are an excellent structure. And I don't have recent numbers, but it's about 80% of the companies in United States are operating as sole props. So, there's a reason to have a LLC. There's a reason to have an S Corp, a C Corp, all of the different types of structures. There's reasonings, but there's also good reasons to be a sole prop. And unfortunately, well, actually, I want to say, unfortunately, they don't get mentioned or give the respect they deserve, but that's because not as many people make money on sole props. LegalZoom doesn't make money on sole props. If you look at it, there's no franchise tax fees on a sole prop. So government doesn't make money on sole props. So they don't get really talked about to the benefit that they are for an entrepreneur because there's not an interest for different associations, individuals, and companies to speak of them. Okay, upcoming shows. We got Samara coming on January 15th next week. I always ask her to come on, especially at the new year, to talk about new HR laws. And a lot of the things that we discuss are even a valid discussion to be exposed to, even if you don't have employees, such as AB5. We always talk about AB5. Can you hire a contractor? Does it have to be an employee? And there is a slew of new rules coming into play, and she'll be talking about it, but a lot of them are affecting the minute you hire the first employee. So this is where it becomes back to a financial analysis and strategy, because when you start looking at how much it will cost you just to put on one employee, you have to then be able to calculate and recognize the amount of sales, revenue, profit that you have to bring in to cover that additional expense. And in that, identify, is it a small leap that you have to do to be able to afford the employee? Is it a large leap where maybe it's a better choice to, and I'm going to say something, your guys are going to go, oh, what? Okay. And this is so true in so many cases. You ready? Sitting down. Maybe it's a better choice to even increase your selling price and lose a bunch of customers, sell less, but make more money. A lot of times what I tell people is you're better off actually having less revenue because what you're selling is at a low profit margin. And my famous expression is, you're going to be more tired and more broke. I say you should have went to the beach for the day and enjoyed the beach. So it's not always about just increasing revenue and growth like, you're being told. It's really about understanding the number and what makes sense. And government laws are government laws, and HR laws can be very expensive, right? So you really want to look at it and see where it makes sense to do so. A lot of times, especially when I work with my clients as CFO in my private business, I'm saying, you know what, let's cut off this product, let's cut down this division, let's go back to this revenue goal and let's increase the profitability. And this is going to make it less stressful, plus you're going to actually make more money at the end of the day. So when we start looking at these different aspects of understanding things from a financial decision, which I'm actually going to talk about in a couple seconds here. Let me get through this so I can bring this up. You'll see that it's really about understanding the entire cost structure and the mechanisms for profitability and success in order to make the best decisions. Okay, let me finish this slide so we can get into our open discussion. January 22nd is Coco, Nicole Green. She's going to come on and talk about Coco's Lip Smacking Cupcakes. This is a delightful company. You love to hear about it. And then January 29th, we got Mia Anderson coming on to talk about hardcore sport. This conversation is going to be very intriguing, very inviting. She's going through a lot of things with her company, really since the onset of COVID, and she's going to be coming on and sharing her experiences. I think it's going to be one of those eye-opening, feel good, and also, feel a bit of the stress and remorse that everybody has gone through and how they're handling it. One of my goals of the show, and it always has been, and I think that's what makes it so popular, is real people, real decisions. I'm not the fake Hollywood person. It's just not who I am. And so I think when we have somebody come on, and we've had many guests come on and talk about the trials and tribulations, the difficulties they come through, and then how they made it through on the other end, that's inspiring and uplifting for everybody. Because so many people, whether they're announcing it in public or not, if I can say it that way, they're going through the same things. So with that, that's what we got coming up. And if you're just joining me, since I mentioned it at the very beginning, if you're just joining me now, our guest that we were going to have on today is unfortunately in one of the evacuation zones. So shout out to him and his family that he's safe, and everybody else that's having that experience. And this is why it's just me right now. I didn't want to cancel the show. I wanted to have a discussion. And so in that, I'm opening the floor to anything that you guys want to talk about. Sadie will always monitor the chat in case you put it in the chat. I don't always see everything in the chat, but if you really want to catch my attention, put it in the Q&A like Brenda. Good morning. I can see a little note from Brenda in the Q&A. And keep in mind, when you put things in the chat, you want to make sure you click down to the everyone button, because otherwise it ends up just panelist and host. And I see your wonderful messages, but not everybody does. So with that, I'm going to start just chatting away, and you guys direct me on what you might want to talk about. So the first thing I wanted to bring up, and what I decided is I was going to go through some of these, somebody once named them Loriisms, these sayings I have, like more tired and more broke and stuff. But I have these sayings, and they have a lot of meaning behind them. And I know I have mentioned several of them on the show, but I never have really taken the time, because I'm just kind of making them as a comment, to fully explain them. So I took out a few sayings that I have, and I'm going to go over those. And then I have some inspirational discussions because it's the new year. So I have a few thoughts to share on that. And yes, Deanna, more tired and more broke. That's one of my favorite ones. And I actually mapped that out in a financial model to show you what I mean by that. Someday, maybe when we have a Lori discussion, I'll go through the financial model and show you how I explain that. But here is something it's still about a financial model, but we're going to just talk about it in verbiage type analysis. And the question is, and Sadie, if you could put this in the chat, if you are not making money, when will you and how? So the best way for explaining this is, too many, I'm not even going to say too often, I'm going to say too many entrepreneurs today are led to believe these old sayings, such as, well, you don't make money for 2 or 3 years, or, well, you know what, it takes a while for you to make money. And so what happens is, when they're engaged in their company and they feel like they don't have extra money, their bank account's looking low, things aren't going well, they just kind of feed into this false belief, well, you know what, it takes a while to get started, and when I increase my sales, it's going to, definitely happen, and then I'll be making money, and this is where I'm at like now, and so is all my friends, and so it's okay. And so it just becomes perpetrated as the truth when it may not, and often is not. Let me explain. Where that concept of it takes several years to be profitable actually originated was back in the day when we were more asset-based type companies manufacturing. So what you would have to do is, out the chute, if you will, if I can use that expression, you had to buy a plant, property, and equipment, PP&E as we discussed it, the conveyor belt, you had to get everything set up to manufacture, etc. And so that investment that you engage in, it takes a while for you to make and sell enough widgets, whatever the widgets are, for that investment to pay off. Now, believe me, it wasn't like the owners were not getting paid. They they had penciled in money for them. The plant, property, and equipment was on loans, etc. But it took a period of time before we say the next widget has the lowest cost, right? And that's where this concept of, well, you don't make money for some time came from, and it had some truism in that. Well, now let's look at today's business model. So follow me in my discussion and the thought process. So let's just take a few business models that are so simple, but we can get our heads around it to understand this concept. Say you're doing web design. Okay, we can all understand that. Say you're a consultant, such as I am, right? You can understand that. Even say that you are someone who has a service-based business and you hire in people to do something, anything along this line. So in that, if you are going to increase the sales, so I'm going to make little lines here, say your sales is going up. This is also true of a product company because we're mostly distributors. So here's the sales going up. Let's think about the cost to produce that product or deliver the service. If I am a web designer and I am increasing the sales, I am going to get to a point where I am going to have to either include more of my time or I'm going to have to hire somebody else for the time. If I do more web design, I hire people for more time. I can't say, okay, I've just paid you for 20 hours, so the next 10 hours are free, like an assembly line conveyor belt. I can run the conveyor belt faster. Think of Lucy and the Chocolate Factory. I can't do that. For every sale, there is an equal amount of input in the cost to produce that product or service, right? So you can't increase your profit by increasing that sale. Now, it is true that if I'm doing web design, I may not have to pay for any more overhead for a certain point, but there's going to become a point where, okay, I'm going to need a new computer. I'm going to need a new office. I'm going to need new marketing dollars in order to put in to get that additional sale. So this is your revenue going up. Your cost is, let's see if I can make my hands go this way. The cost is going up the same amount, and the overhead may be a little bit different, and you get a little bit of profitability out of that, but not enough to say, oh my God, I'm making so much money, right? So if you are in one of these business models and you're saying, okay, I'm just going to make additional sales to make money, no, and I can show this in an algorithm model that says, okay, if you figure out the percentage of cost, you can add that cost in, the relative percentage of the overhead, you add that in, and you can see that you're just basically spinning your wheels. You're getting more tired and more broke. And it's because each transaction on its own needs to hold its own profitability. So that's why I say the question is, if you're not making money, when and how? You have to understand, how is that going to come about, and not just answer, well, when I get more sales. Well, then you got to turn around and add in, well, this is going to be the cost, this is going to be the overhead I need, and so where's that going to be now? And what you'll find, and this is another expression I say, you can't outsell a bad cost model. So what I mean by that, you can't just increase your sales to become profitability, because if your profit margin on your products and your overall profit margin and your net income is not high enough to sustain the business, more sales just means more production, means more expenses to run the company on a daily basis. So you can't sell yourself out of this bad cost structure. What happens is the cost structure wasn't right in the beginning, which could be a combination. You're not selling at a high enough price to cover your cost to produce, to cover your overhead, and then have enough money left over for you to have money and reinvestment in the company. And I'm going to say that again, and Sadie, try to capture it as much as you can. And I'll say it this way. When I was teaching at USC, and I was teaching at USC and Pepperdine, but I used to do this a lot at USC because it was the undergrad, I would say, what does it take to succeed as an entrepreneur? And they had already been told all this stuff before they got to my class. So I knew what was going to happen. It happened all the time. They were all excited. They were like, I know. And they would jump up and they go, passion, it takes passion. I'd be like, no, passion gets you out of bed in the morning. That's it. Nope. And so then another person would say, you need to have sales. No, part of the answer, but no. And you need to have this. And they would say all this stuff, and they would get, and then eventually the hands that were all raised with excitement, there would be only a few, and then there'd be only a few more, and then be only a few more. And once I got them fully beat up to realize that they weren't getting the right answer, so they listened to me, I would write this on the board. The only way you succeed in business, if you are selling enough of the products or services at a high enough price to cover the cost to produce, to cover the overhead, and have money left over for you and reinvestment in the company, that is the only way you have a successful business model. And what I was beginning to do was to teach them a cost structure, to teach them how to identify what those numbers need to be. Because you can't just look at one number. You can't say, well, I'm selling it at this. People say to me, well, I'm selling it at this or I'm selling it at that. It is the relationship. It's the holistic, just like a body, if a body is holistic. If the mind doesn't feel good, the body doesn't feel good. The spirit doesn't feel good. We understand that about our human being. We're holistic. Companies, believe it or not, are no different, no different. So you can't just focus on a component. I have seen people, I had this one, I'll never forget it, back in my private company. He was so big into bragging that he was a $30 million company. I was coming out to, to help them, and I didn't know the whole situation. Oh, $30 million company. Okay. Well, I got there and he had 29 million in cost of goods, and it wasn't even $1 million he had left over at the end of the day. So I was like, actually, no, you're really $1 million company and not even that. So it's learning that it is all about the revenue, the cost to produce, the running the company on a daily basis, and the net income that matters. And when people always say to me, they say the words all the time, I made, and they give me the revenue number. And I'm like, no, 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 honey, you didn't make that money. That's the sales. That's the revenue number. How much did you make? No, I made that. No, 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 you didn't make that. That's not the money you made. And I said, the net income's what you made. But they really don't know it because you can't get this number off your internal financial statements. You have to know how to do these calculations in a spreadsheet. You could do it on a piece of paper with a pen and calculator, but you have to know how to do these calculations that tell you how profitable are you at selling each of the product or service, how many products or services do you have to sell to cover the cost, to cover the overhead. And if you don't know that, you're just spinning like the little hamster. And it breaks my heart, guys, because I mean, the amount of companies I speak with on a weekly basis is unbelievable, as you can imagine. And I know this sounds extreme, but I swear, I'm telling you, 97% of the ones I see through the SBDC are not making money. Many of them don't even know it. And it's because they don't have this understanding. And so there is an ability to make money. It's just they have to reassess the cost structure and make different decisions. They have to make different decisions within their company. So want to know more about that? Let me know. I do talk about it a bit on some of my webinars. Maybe I'll have one of the sessions where I'll just show you a little bit of demonstration on the cost structure, but it's real important to ask these very, very important questions. So I can see a whole lot's going on in the Q&A and the chat. So before I go on to the second thing, I think I need to pay attention to some things going on here. So Sadie, I am going to start in the Q&A, and you then back me up on something I should look at in the chat, okay? Christy
Okay.
and Skip, oh my God, there's some names from the past. Love you guys. So great to see you. I miss you too. Your finance guy said we should start using a business line of credit instead of cash for business transactions. And cash, oops, I just missed. Okay, it skipped for a minute. Cash should be kept in high yield accounts. Could you explain the how and why of business lines of credit? Okay, so this is there's possibly truth to this. There's possibly truth. And the reason why I say this, and of course, as always, I always say this, guys, when it comes to finance, it's usually something I can't answer like really quickly in detail, but I can give you a feel for it. And this is why I say it's possibly true. I am going to first explain this to you guys by explaining a strategy that I would use a lot as the CFO of companies, right? Still do, but one of them I always looked at. And what I'm looking at is Well, I'm like being careful because I'm trying to make sure I don't confuse you or get you into things that you shouldn't be in. So I'm being really careful in figuring out how to use my words here. So if I'm hesitating, it's just I'm thinking my words through. Okay. When you when you get to a point where you have a lot of financial things happening, let me tell you what a lot of financial things happening. You maybe got a line of credit, you got some debt, you've got, you get to a bigger size company that's a little bit more complicated. You do have money in the bank to pay vendors because you're paying a whole lot of vendors in 30 days. And you've got a little bit more wiggle room, but you're also pushed to the max because you've expanded into debt for growth, et cetera, in this. So what I'm talking about really is companies that the individual solopreneur, please, this isn't a strategy that you're engaging in, okay? I don't want you guys to start playing with these weird strategies at all. But in answering the question, this is what I would do, especially in turnarounds, which I did quite a lot. Those are companies in financial trouble that I would come in. I would do these in turnarounds. And here's the concept. So I would look at what I call the arbitrage. What's the difference between how much money I can make on money that's in like a bank loan or in some kind of situation like that? How much money can I make on maybe a money market, etc., in relationship to how much it's going to cost me to borrow money? Now, this doesn't work as well today, but in the olden days, there was pretty good payments on interest payments, right? So what I would do, like for an example with this one company, is we used some of the cash that I knew I had available for a short term to put in an overnight sweep account that I could earn a certain interest on. Then my line of credit had a lower interest rate, so I would use the line of credit and then I would kind of play balance where then I would take the money out of the sweep account that I needed to pay the cash for payroll and make a little bit money on the difference between the interest rate I was getting on the money stashed away and the interest rate that I was paying on the line of credit. So this is why, Christine and Skip, I'm saying it depends, because you really have to do the math. Because if you're paying more on a line of credit and then you're using your own cash, that may not make sense. But then there's a secondary thing that comes into this. So especially when you're in a tight financial situation like I was in turnarounds, you got to kind of look and go, well, man, I don't know if we're going to get the payables in. We can't make payroll. It is costing me more in the interest, but I better keep my cash available because I probably won't be able to borrow any more money given my financial situation. And so I have to make sure I have the cash available to pay payroll. So, really, in my ramblings right now, and I would say this quite a lot, when it comes to managing especially complicated business financial situations as a CFO, there's no hard statement such as, well, we definitely should make sure we put this money in the bank because we're getting this, or we should never pay a high interest, or we shouldn't do this. You have to really start looking at all of the situations and saying, what is the situation today? What will be the cash flow tomorrow? What are the vulnerabilities? What do I have to do? And sometimes you have to do these decisions where actually as a CFO, I'd be like, God, I hate paying that interest, right? But I have no choice. But, okay, guys, hear this as a big but. I want you to hear this out of everything I said. This is the most important, and it goes back to what I was saying about cost structure, okay? No matter how you make these decisions, you have to make them with a full knowing of when, and I'll use the expression, it's just expression that I use, I'll explain it to you, but when it's going to pop the other way. Like, for example, if I know I'm going to borrow from some money, I'm going to pay a little higher interest rate, but I got a pretty damn good idea of exactly when the sales are going to come in, how much the profit is, and listen loudly to me, and I have calculated in the cost of the capital, the interest rate, into the selling price, so I know the profit is covering it. So I'm playing a lot of games where I'm going, okay, I got to borrow the money, higher interest rate than I want, but I'm going to make sure that I know when I'm getting that money back. And I'm also calculating in the cost of borrowing that capital into the end result. So Christine, Skip, you have to give me a little thing in the Q&A. Does that kind of explain what we're talking about? So I can say that that may be potential as truth in what they're saying, but I would have to be able to look at all the circumstances, and just saying it blindly, like it's a good thing to do or a bad thing to do, is not correct, because you really do have to look at every single situation that is being affected and find out how it makes sense. Otherwise, going down these roads without fully understanding can lead you down bad roads. And too many people take these, and this is why I said at the beginning, I'm trying not to make any statements that is going to lead you down these wrong directions, because people hear about these strategies that you do, like I did as a CFO, and in small companies, they pick them, it's just like, I need to be an LLC, I need to have an umbrella company, I'm like, yeah, we should divert money through the Canaan Islands while we're at it, right? So you really, really, really have to comprehend the full story of why the people are making the decisions, when they're making the decisions, how they're making the decisions, because it's a little bit more involved than that. Okay, let's see. Anonymous. Oh, I love this question. It's a great one. How do you pay yourself as a sole proprietor to account for taxes? I've heard the term owner's draw, but don't know what that means. Excellent question. And I'm going to add to this, guys, not only a sole prop, but a sole prop and an LLC. They're taxed the exact same way, and it's the same structure I'm speaking of. So I'm answering the question for those sole props out there, but I'm also answering the question for an LLC. We'll hear a lot of times people will say, well, I pay a salary. You do not pay salaries. W-2s and salaries are not applicable to these legal structures of a sole prop or an LLC. So first of all, we got to go into an equation. So let's go into an equation. And that one is all the revenue or sales, let's say a whole year, whatever the revenue or sales is, let's say it's $20. Let's make some up, okay? All the cost of goods, whatever it was to produce the product, let's say it's 5, okay? All the overhead expense, whatever it was for running the office on a daily basis, let's say that's 5, okay? We subtract that and we get 10. 10 equates to the net income. So 10 is the net income. The net income is what you made. Going back to that expression, net income is what you made. That is what you made. Okay. So when you look at that $10, if you were, I'm just going to put in quotes and say this for a second, okay, because it's not the right terminology, but just to communicate, if you were to pay yourself, I'm just going to use that word for a second, it's the $10 you get. Okay. You get. Do you get $12? No, you didn't make $12. You only have $10 in net income. You can't take $12 because you only have 10, right? You only have 10, right? The dollar to buy the car. What was that old show? Does anybody remember? I can't think of what it is. Well, if you have the dollar to buy the car, right? But you only have 10. So that $10 is what you are taxed on as well. And it doesn't matter if you left all that $10 in the bank. You're still taxed on the $10. Say you took the $10 and bought something for the company, that's fine too. It's the $10 is the net income that you have, a meaning bought something for the company the next year is what I meant, not that year. The $10 you are taxed on, whether you take it all out, you buy a yacht, you leave it in the company, you leave it in the company to buy something for the company down the road, is what I was meaning. That is the $10 you are taxed on, okay? Now, say if during the year you take out $1 by just transferring it to your bank account. That's all I'm meaning. It goes from your business bank account to your personal bank account. And if you're a sole prop, you could be using your personal bank account. So it doesn't really matter. It's not like this dollar has a marking on, but the $10 is what you can take. If you took $12 out of the company, then you would have $2 as a capital gain because that's not taxed. So can we use the word owner's draw? Technically, it's not, but let's talk about what the word owner's draw actually means and is used a lot in slang words. When you think about a salesperson on commission, they kind of take a draw against what they're going to make, and then they have to make that amount, right? So if you look at it like, okay, I'm going to call it that because I'm taking it out during the year, but I got to, at the end of the year, make sure I didn't take out more than I actually made, we could call it an owner's draw. But let me say the best way to do this, guys, okay? So that was answering the question, trying to tie into the words you use. Let's now answer it in another way. going back, I'm always repeating the same thing from different angles. You have to know how much at any given month you made by looking at not your income statement, not your bank statement. It's not going to tell you that, okay? You got to say, what was the revenue I brought in? What was the cost to produce the product or services directly related to the revenue? Like if I sold 5 shirts, what did it cost me to buy those 5 shirts? Not the 5 shirts and the jeans I bought to sell later, but the 5 shirts. You got to do what's called the matching principle. You match the amount sold, the quantity sold in the revenue and the quantity sold in the production. So if I say, well, I sold $10 worth and it cost me $5 for those shirts, I know I had $5 left over at that juncture. But I still got to pay overhead. I'm not done yet. So then I say, well, $4 it cost me that month to run the company. Okay, I got $1. So what do I get? I get $1. Okay, I can buy the car. So that's the way you want to keep on top of it. And that's where I am so insistent that you have to learn these basic formulas. But guys, it's like a dance step. It's always the same formula coming back around. I'm always coming back. Yeah, it's the same formula, same thing. So once you learn it, you understand it better. So this is why you have to know what you're making. I mean, okay, let's look at it this way. Can you imagine if you like never knew how much net income, not net income, I meant net pay. I was trying to be a salary person. If you never knew what net pay you got and you just went, okay, I'm going to go buy a house and I'm going to go on a vacation, but I don't really know how much money I'm bringing in every week. You'd be like, that's crazy talk. Yet business owners do it every day, small business owners, not realizing that these are numbers they can calculate and should be able to calculate because they're not taught. It's people don't understand that, okay? So, oh my God, I went on and on about that anonymous. Put in the Q&A. Let me know if you got it or anybody in the chat. Did you get what I was talking about, guys? Hopefully, because I was speaking to a whole lot of people asking that question for sure. Okay, where am I in my thing? Ah, hello, Patricia. Happy New Year. Hello. Hello, Randy. I know it's Randy. I know Patricia's Randy. What information do you have on the 2020-2021 self-employment tax credit? Not sure and which one you're speaking of exactly. Are you talking? Yeah, I'm not sure. So, Randy, you're going to have to touch up base with me on that. I mean, you have the tax credit for the qualified business income, but I'm not sure. So you're going to have to touch base. It's not ringing a bell this morning, and maybe it's because I'm missing what you're saying by which self-employment. It's the self-employment tax credit. I'm not sure what you mean on that. So you'll have to touch base with me and we'll get on that. Okay, where am I? Sadie, am I missing? There's a whole lot going on in the
Oh,
chat.
there's a whole lot of
Oh my
activity
God.
in the chat
What am
window.
I supposed
It's
to be
blowing up.
paying attention to? Yeah, Sadie, tell me where I am, okay?
You know what? I backed it up. I backed it up so I can read some to you. You know, I want to insert my voice in here. What can I say? I like
You
talking to you
do. Catch me up.
So, a question, and I thought this was interesting, and this is under host and panelists, so everyone can't see it. So, if you have a question, we say please put it to everyone so everyone can see the question because it might be, a common question. Anywho, so Lori, what is your opinion regarding borrowing from Peter to pay Paul? I am opening a restaurant. The norm would be 10% of gross for rent and 30% food costs. My food cost is lower than most and rent is higher. Is it a bad idea to apply the percentages and differently, such as 20% for rent and 15% food costs when forming budget projections?
Well, in this, so it's a lot more complicated than that in the way that I need to answer it because when we say these percentages, we have to make sure we fully analyze and calculate properly where these percentages come from and percentage of what. So for an example, if you say my food cost is, I don't remember the exact percentage, it doesn't matter, but a 30% or et cetera, it begs the question, 30% of what? Now, if you say 30% of revenue, it's going to be 30% of a revenue number. Like what I'm trying to say by that, guys, and I'm making something up in my head right now, so follow me on the thoughts. Say my revenue was $10, right? And my food production was, $5. That's going to be a different percentage than if my revenue goes up a certain amount, right? So you have to kind of, let me get a drink of water. Hold on here. So when you look at food production, you do have a certain alignment. So if you sell more food, you buy more food, and the relationship may be such that as the revenue goes up, the food production remains 30% or whatever. I might have the wrong percentages, but what I'm saying is that that percentage you're using could have some correctness to it, because if you don't sell another food item, you're not going to be buying another food item to sell. If you sell another food item, you buy another one, and perhaps it's like for every dollar sold. In other ways, when they say this, for every dollar sold, it cost you 30 cents in the food component. So there could be truth on that being a aligned number. Now, you also said your rent's a percentage. That can't be, because if you sell $10, your rent's still the same number. If you sell $30, your rent's still the same number. If you end up bad sales that month and it's only $5, your rent's still the same number. So a rent number and overhead expense is where that comes into, can't be defined as a percentage of something unless you identify what that something is, and that feeds into the revenue, which feeds into the cost structure. Okay. So I know I probably made your mind spin, but that's where I say let me say it this way to you guys. And this is, I'm staying in the same thought process, but I have to kind of say this way. Too often and on a daily basis, you hear people constantly, and advisors as well, throw out these ridiculous numbers. Like I heard people say, you take a third for, I can't remember, it's so crazy, but I know somebody in the audience has probably heard this said, you take a third for taxes, a third for you, and a third for something else, for overhead. There's no mathematical correctness in these numbers. There's just not. I sit there and think, where in the you know what did they even come up with this? But it's spoken about on a daily basis like it's the truth. And it's frustrating to me sometimes because somebody asks a question and somebody goes, well, it's a third, it's a 30%, it's a 50%. And then I have to give you a 20-minute answer to say, I don't know unless I put it in a spreadsheet and we actually look at all the numbers to identify, right? So in that, what anyone, especially doing a restaurant, really has to know these friggin' numbers, because you've got things like the rent, you've got a certain cost just to get started. You don't have the flexibility like a solopreneur. So you have to know exactly what the percentages are dependent on the revenue forecast, and what's the minimum revenue forecast that you have to have in order to produce the correct cost structure. Then you have to make sure that you identify that those gross profits are met on every food item or a blended rate. Now, I know everything I just said, you're kind of like, oh my God, I'm not sure what in the world you just said. Please reach out to me and we'll look through these numbers. But the key is that when anybody says a percentage of, they have to have more of a model. I call it a model. It's a spreadsheet model that I use, because the variables change. So even though the percentage of the food to the revenue could be correct, the percentage of the rent to the revenue is not correct. And so you have to know what your cost structure is. And the cost structure is a percentage of all the variable components. And I talk about it like in a Rubik's Cube. Like, okay, you do the Rubik's Cube and you go, okay, this gets that, this gets that, this gets that, and then you turn around and say, okay, there's some combinations, which is the ones most probable and feasible. And so that's what I'm doing, is I'm looking at a model and I'm going, well, if the revenue's this and we have a cost production of about 30%, we need to make sure that I get the revenue at this amount to cover the overhead, which is this percentage, to get the net income goals of 10%. And then I can monitor and manage each of those inputs. Okay. So I don't know, hopefully you'll have to give me a comment in the chat, or, where Sadie sees it, or in the Q&A if you understood anything I'm saying. But the thing that I will never do, guys, I will never answer ever. I will never answer a question with a definite answer if I don't have all the numbers and I know a variable in that number exists, because I would rather say you can't say it with just that information than answer something incorrectly and lead you down the wrong pathway. Sadie, did I get all of that question? Did I miss anything?
Well, I like the way you explained it because, sometimes it's the we don't know what people are talking about, and not the saying that you don't have the knowledge, but it's more so of it's the information is nuanced, right? Where we think we're asking the question right, but you're like, wait a minute, you need to give me a little bit more so I can give you the answer that's tailored to you. So we're kind of giving an overview is the way I would describe it.
Yep. And we got to look at numbers. And I really think just too, with the way that the numbers have been said, you got to make sure that you got the numbers. And I'm going to, before you go to the next one, I'm going to follow back to Randy. Yeah, I like what she's saying is I sat in a Zoom about the self-employment tax credit and I wasn't sure. And, I was saying, I'm not sure what you're talking about. Self-employment taxes is Medicare and Social Security. Okay. That's what they are. And I don't know how you get a tax credit on that other than maybe dying. And then the government gets to keep it, right? So that's why I'm saying that, a tax credit, getting a credit for your self-employment, maybe there's something else they're talking about where you get the, QBI tax credit or something. But I don't know anything about, well, I get a tax credit just for paying my Social Security and Medicare, Randy. So yeah, give me the information so I understand the whole story on that. Too funny. There is so much out there that's, kind of, sometimes I don't know exactly what people are talking about because I don't have the terminology like the IRS would use. And sometimes it is a lot of scams out there. Sadie, back to you. Where should I be looking? I'm all over the board. And I know there's a bunch going on in the chat. What have I not addressed?
Well, you know what? Actually, I have to have a little special place in my heart for David, who was supposed to be joining us. And I'm looking through my emails. Bless his heart. Here's this guy. He's literally next to the fire, letting us know that he can't come, but he's giving us advice. Remember how he sent us that email with the
I
advice?
know.
I was like, oh my God, David. I'm like, here you are, like almost on the verge of evacuating. He's like, I have some notes for you. I'm writing at 5 a.m. But for some reason, it is not loading. Let me look on my phone. But in that moment, Lori.
That's okay because I'm getting David back on, but this is why I love having David on. Like I said, he is one of those golden people. When I have somebody come on as an expert, just like Zamara and many of the other people I bring on, I only bring on people that I just know, trust, and they have the integrity and the information to answer the questions in the way that I like them answered, and that is thorough and intelligent and logic and backup. But yeah, David is a great one. Yeah, just let him know we're going to get him back on, and he's going to be giving us all that information that we need. I can tell him to just worry about his own situation, but it is so true. I remember it was a long time ago, and I was in Malibu during one of the fires, and I was so worried because I was supposed to have an on-site webinar, and I needed to get out, and I was calling the SBDC. Is it okay if I go ahead and leave? And they brought that up later. It's like, yeah, get out of there. We'll cancel the webinar. So I know that feeling. Totally know that feeling. So Sadie, if I can jump into something another brain thought, but I feel like I'm missing a little bit of what people may be asking me in the chat. Am I missing something?
I think people are more having the conversation of like cost structures. Like it's almost like the make it make sense because I think it's the am I doing this right? Because it's like I think maybe what happens sometimes it's people like, well, we don't think of all the elements that are involved in doing our pricing, right? Like you got to think about the electricity, like the internet, like you are the janitor in your own small business. Like we've all been there, right? Where you're just like, yeah, I'm a CEO, but here I am, like literally, vacuuming, sweeping, taking out the trash, and how am I supposed to be working on, new leads, new business when I literally have to clean where I'm at. So I think that's what people are trying to figure out. It's like, how do I get to that point where I'm charging enough for my services to actually grow versus just staying in this place where you're not making money, you're just trying to make a go of it.
Well, and in that, so when I speak about cost structure, it is a process of calculating and putting in numbers and realigning them. So it's the reason why people don't understand it is it's not something that I can just like say 3 sentences, this is what you do. It's something I teach in the literacy series 2 and 3, and I can have a show that I can kind of go over it a little bit more and demonstrate it by a spreadsheet. But in that, let me mention a few things. So when I'm looking at a cost structure, I'm literally looking at it as a percentage model. So I can get get down to the point where I can say, out of 100% of revenue, what is the percentage for the production? What is the percentage of the overhead? What is the percentage of the net income? So if you think about it, if I can like make my fingers do really weird things, I turn it into a circle. So the cost structure is a circle, right? So at 100% of revenue, I might know that 30%, but it based on the revenue amount too. I know 30% goes to the production. Then I have another little thing here. I might say 20% is running into the overhead, right? And then, this amount, making up numbers. This amount is the the net income, right? But I know that that's going to be at a certain revenue amount. So if the revenue amount decreases, okay, I'm going to go slow on this, guys. It's percentages. I can demonstrate this in spreadsheets to make it easier to see. But if the revenue decreases, the percentage of overhead increases, it is costing you more to run the company because it's being spread out under less sales dollars, less units sold. And so the cost of production may decrease because I'm selling less units. So I don't have to pay to buy more units. But the overhead is going to increase as a percentage. So if I have a circle and the cost of production stays the same, suddenly my overhead increases and starts taking away from my net income, right? And CFOs, we understand that. We know exactly where it's going to hit in the circle, if you will. And so what happens is I understand the basic cost structure based on a pretty definite revenue that we're going to reach. Not that I plan on, I hope so. Yeah, no, this is the revenue we are going to reach, right? So I understand the cost structure on that, right? Well, if it goes above that revenue, well, we're going to be okay, right? Until I have to hire on, then I have to relook at that cost structure. But if revenue decreases or cost of production goes up or overhead goes up, my entire circle is going to change. I have to look at it and say, do we need to pass the charges on to the customer? Here's another way of understanding this. If you look at corporate America, the minute cost inputs go up, the prices go up. They immediately pass it on to the customer. They understand that cost structure and they're seeing how it's moving and they're making amends to their business model before it even hits them financially. And another thing that I always talk about with cost structure, and this is what small companies don't understand is, and here's my rule: if you touch it, it is a cost. If you use it, it is a cost. So people calculate, going back to what you're saying, Sadie, about the cost. They go, oh, here's the cost to run my company. I'm like, did you just talk on your cell phone? Yeah, but I pay that personally. No, no. You take a percentage that you used and you put it in your calculation. Because if you turn around and you grow and then suddenly you have other people and you need to pay for phones, you did not include that in your cost structure. See, this is where I see it to really devastating effects. People start out at their home, they're making a little widget, they're doing some service, they don't count in at least a percentage for their rent as cost, they don't count in percentage of the cell phone. They go, well, I'm doing it, so I'm not going to really count in, I'll get paid down the road. So they set a selling price based on, oh, I'm not getting paid, my time's free, my cell phone's free, my computer's free, I'm doing the marketing too, it's free. And then they wonder why they never create enough profitability to pay for them, pay for a cell phone, pay for a computer, or pay for marketing, because they didn't put the original cost. They acted like the cost didn't exist. So if you're, when I have people do these type of analysis, these models, we look and go, are you being the marketing person right now? We got to calculate in that many hours at a going rate for a marketing person and put it in as a placeholder, because we got to make sure that you're setting prices accordingly. This is why, if you can follow me at all on that, this is why companies grow themselves into no profit. They start out doing it on their own. They're small, they're making money, but they never calculate their cost structure. So then they add a person because they're really busy. But where did that person's salary come from? It comes from their profit, because they never included someone to be doing an activity. They included themselves doing it. They're doing it for free. So all of a sudden, I'm doing all of this for free. And then all of a sudden, I hire somebody to replace some of the things I'm doing. Well, that's going to go lower in my profit margin because I never calculated the cost for me to do it in my cost structure. So you'll see that people will start out making money and they grow and their sales are going up. And that's all they do is they go, we made more money. No, those are sales. you're actually in debt, and now you're borrowing on your credit card, borrowing on your line of credit, you're borrowing this, and you think you're doing it to invest in your company's growth. No, you're doing it to cover the margin, the profit margin you're not making because you got a bad cost structure. This is what I see on a daily basis. So the cost structure is a calculation. It can be done. It's easy to figure out. It was just you got to have knowledge of it. And it's once again, where I come up with this, you can't like Google cost structure. You can't find a book on cost structure. These are Lori's words, and I'm gonna put this in so you understand this. And many of you that know me know this history. I started out in podunk little country girl and started my small company at 25, not knowing any of this. I was a marketing person, right? And then as I wanted to understand just really how can I pay for my rent? It looks like I'm not doing good. I then was trying to self-teach myself finance. And long story short, it led me down this pathway of being so frustrated that I didn't understand. I started taking classes, realized I really did like finance, and ended up, we know, banker, investment banking, CFO. I mean, I'm the guru of finance, but I didn't start that way. I started as a small business owner going, why the hell can't I pay my damn bill? I'm working my butt off, right? That was my first thing. So then I ended up being, CFO, 30, $60 million companies. And I got to the level of understanding finance that I went, well, friggin' no wonder small companies aren't making money. Well, yeah, they're not structuring the financials the same way. They're on a cash base. That's not going to tell them, oh my God. And then I wanted to come back to what I called my tribe and explain to them. But I first had to figure out how to even change some of the internal numbers, meaning that your internal financials is on a cash base. Your income statement just tells you how much cash came in and how much cash came out. So I had to figure out, without making it a complex analysis like I was doing with the big companies, how can we make set spreadsheets on the side, align information a little bit different, and create some kind of tools that they can understand and use. That's where my financial literacy classes came from. That's where my models come from. That's what I teach people through the SBDC, as well as still do privately, is how to be able to analyze this. Now, why did I bring this up to our discussion? Is I'm trying to say to you guys, this is a CFO financial tool I'm talking about. So it's not that, okay, let me just do a Google and learn it in 2 minutes. It's really spending time and getting into the numbers. But it's a road that when you walk down, you're gonna walk down a little bit of a road to learn it, but you are going to be so happy that you did, because not only will you figure out what it will take to make money, but you're not going to go to bed every night worried about whether or not you're making money. So yes, cost structure is really important. Are you going to walk away from what I spoke about today and be able to do it? Absolutely not. I would, but you're going to at least get enough insight to be able to say, maybe I should consider my cost structure. And like I said, I didn't know what we were going to be talking about today, but that's kind of what we're talking about, is cost structure. But it's really, really important to know your numbers. And like I said, if you pull up your income statement is on a cash basis. Think about your bank statement right now. That's where the information is coming from. Say that you hadn't paid for a bunch of product you bought, but you already got the money. Your bank statement's not reflecting that purchase. So your bank statement is not matching. It's the matching principle of saying, this is how much revenue because we sold 5 shirts. This is how much it cost us in 5 shirts. You might have bought the 5 shirts several months ago, so it's not reflecting the withdrawal of paying for those shirts, and it's just showing you, look, we made all this money, is what I hear people say. No, more cash came into the bank account that month that went out. You report your taxes on a cash basis. So your taxes aren't telling you if you're actually profitable. It's saying more money came in that went out, or the vice versa, right? So unless you extract these numbers and then do a separate analysis that identifies how profitable are you on selling each of your product or service, how profitable are you on selling what quantity you're selling, and how profitable are you after paying overhead, you really don't know these true numbers. So Sadie, I think there's a whole bunch that I got just a minute or so. Am I missing any big question or anything that I need to
No,
address?
I mean, it was really about cost structure, 'cause everyone's like, saying like, "Ugh, if I woulda known, and this is what I," and it's like, 'cause honestly, like for me, actually, like my little random, ask Sadie Ask Sadie anything moment is like how I got into the SBDC is actually started to do, I was a live events, I'm bilingual. And you're at the tables, you're meeting, clients, potential clients interested, and always the number one question, it's like, well, oh, you're interested in starting a small business, like, like what are you charging or what do you want to charge? And you think you're going to get a number, but always, like 90% of the time, the answer is like, oh, well, I want to sell myself, for the cheapest price possible. And it's like, no, no, that is not the answer.
Oh, nope. And so it really, years ago, it was about a cash society, a small company. I always say, along with this, I make this statement, there is no such thing as a small company anymore. And it's because in the olden days, especially when I grew up, on the farm and the farmland, even my neighbor who sold tires, he would pay cash to buy the tires and then he'd get cash to sell the tires. And he could pretty much look at his bank account at the end of the day and see if he had money, right? And he knew exactly how much he bought those tires for. He knew exactly how much he was selling for. He wasn't selling on Amazon. He wasn't getting credit. He didn't have PayPal. He didn't have all these government fees and fines, none of that stuff, right? And so what it requires is every small company has to have a certain level of financial analysis going on in their company because their companies aren't going to just blatantly demonstrate those numbers through their bank account, right? So you have to have a certain level of financial analysis. And so I would say in conclusion, the thing you want to know is if you at least sit down and do this much, I'm going to go over a couple minutes because I just want to make this important statement. Write down the selling price of every product or service you sell. Analyze the exact cost to make that product or service. Okay, with me so far? Sadie, you capture this in chat. Write down every single product and service you sell. On one line in a column, write down the selling price of that product or service. Then do the hand calculations to figure out the exact cost of that product or service. Subtract that, and that's your gross profit on that specific product or service. Okay, set that aside. Write down all the overhead that you have on a monthly basis. That's the rent, the marketing, and include your time, include your cell phone, include it. If you touch it, there's a cost. If you do it, there's a cost. Include that. Okay. Now figure out how many of those units do you have to sell to pay for the overhead. Remember, it's the gross profit out of that to pay for the overhead and have money left over. That's going to tell you how much revenue you must sell in order to cover your overhead and have money left over for you and reinvestment in the company. If you do the gross profit, the amount that you're selling it for, the amount it cost, and you put it into a gross profit percentage, you might look at and go, well, this one's at 50%, this one's at 60, but this is only one at 30. Well, if you're selling these different items for different percentages, that means this one that's 30, you only have, a 70% left over for overhead and net income. So you start to look at and say, well, every time I sell one at a lower gross profit margin, then it's bringing down my overall gross profit margin amount. And since people don't look at it on an individual basis, I will see them selling these different things at such a variance in the gross profit margin that they don't realize that they sold 5 widgets today they made money on, but the other 10 they sold took away all the money they actually made. So that's cost structure in a very simple way that you can do a back of the envelope and kind of start seeing it. But please do reach out to me, set a one-on-one, take one of my financial literacy, and maybe down the road we're going to have a small biz talk, just really where I got some models and I can demonstrate cost structure. Because like I said, I wasn't really planning on what I was going to talk about today, but that became the fascinating topic for this morning, and that's where we went. And I'll tell you what, I'm going to end on this last part. If at the end of this you go, I don't know what the hell she was talking about, but it's scaring me a little, and I think I resonate with what she's saying, I better find out. I've done a good thing. Sadie, back to you.
I like that one. It's like, whoop, but we all know that feeling where you're like, you know what? It's the apprehension is the only way I can describe it. And I'm not gonna lie, I wasn't able to type everything in
No
there.
worries. No worries.
Like I said, but for me, it's like I like explaining it in my little Sadie world and joining it into Lori, where it's like because we're all about here for our small businesses to succeed. So it's like kind of like these just really small little nuggets where like Lori's like, yeah, like she wants to make you go, because I mean, that's like the worst thing when you're like, but it's the internet, it's the lights. I'm like, we got to think about all these things, cost structure, but that's right. But we're going to make that maybe a special webinar or, and you can get the Excel sheet out and just kind
I
of,
will. We'll do that. We'll do that, guys. I'll probably in February, I'm going to do just some modeling to show you what I'm talking about. So we'll have a cost structure modeling small biz talk. I promise we'll be back.
ooh, I'm
So I just
excited for that one.
we're going to have that. I just want to do a quick shout out to everybody, anybody near the fires, everybody affected by the fires, which is pretty much everybody in California. Heart out there to everybody. Please be safe. Thank you for just hanging with me with this, talk and this, just ad lib as we went. But I think we discussed a very important topic because I think let's make 2025 about getting real. Okay, really knowing what's going on in our company, not being delusionally ignorant, as I like to explain it, not playing with a hope and a prayer, but actually knowing where are you trying to get to? How are you going to get there? Are you doing the right actions to get there? And if not, identify it and change your approach. Let's make 2025 one about efficiency, about creativity, and about self-empowerment. Really, really knowing what's going on. Don't relying on somebody else to tell you whether you're doing good or not. Know how to calculate it so you know. I'm all about personal power. And I think every year I say, let's take our personal power back. And this is a year to do it. So together, let's hang there. I share every bit of information I can with you because I can guarantee from my own life, when you understand the mechanics of how the Monopoly 3D game works, you can make it work to your advantage, whatever that means. I'm not talking get rich, you're going to be a millionaire. I'm talking you'll be able to figure out how you can make the kind of money that you need to pay your bills and survive and meet your desires and wants. And you can figure out a plan, or at least know if the plan you're trying to work on isn't going to work, so you can create a new one. Okay, Sadie, I think I've went on for long enough. You guys heard enough about my philosophies on life. Sadie will stay a little bit longer in case you need to get my info in the chat or any following up conversations. Thank you. I've just looked at the chat right now. That is an overwhelming response. You guys were listening to me. You heard me. You were listening. Thank you so much for that. I appreciate it. And I appreciate you. And I will see you next week when we're going to talk with Samara about HR laws, which comes into what I'm talking about, because you might look at it and say, you know what, hiring people's not a good strategy. Maybe I need to figure out another way to meet that outcome. So we'll talk about what those new rules are and what they mean. See you next week on another session of Small Biz Talks with your host, Lori Williams. Bye, everybody.
Bye.